All right, what's up, everyone? Today, we're going to be doing a little deep dive on our activity matrix here at Santiment to take a look at which networks out there are seeing particularly hot or particularly cold activity here in mid-January. We're now 2 weeks into 2024. We're closing in on a week since the announcement that the ETFs, the 11 ETFs that the SEC we're deciding on, were finally approved last Wednesday. So as the dust has started to settle, we're seeing which coins are breaking out, which are starting to decline. And of course, the overall crypto markets have been on the decline a little bit of a disappointment for the many people out there who really felt that the ETF approvals would lead to an immediate jump to 2021, late 2021 all-time highs that we saw, those same sort of levels. Uh, you know, Perhaps we still may see that sometime in 2024. We're still less than a week in since those announcements were made, but that said, the immediate impact has actually been a bit of a downswing, which, as we've discussed many times at Santiment, is not a surprise considering markets typically go the opposite direction of the crowd's expectation. And we warned even ahead of time that the crowd assumption was pretty unanimous that the ETFs would immediately just push up prices. Congrats if you were not part of that assumption, but most of the posts that we were seeing across social media were pretty euphoric in anticipation of these ETFs being accepted. So here we are now, 5 days later, looking at which networks have really carved out a path to potentially make a breakout here in the second half of January, and which are struggling with their activity. So we'll start right with Bitcoin right here. For those who aren't aware, these red and blue boxes associated with the dates here on the y-axis imply that anything on the red side of the spectrum is essentially a hot day for that particular indicator. So we've got active addresses, network growth, whale transactions, sharks and whales holding $100,000 to $1 million in supply, social dominance, exchange inflow and outflow, and mean dollar invested age and age consumed. So looking at the latest full day, which was Sunday, January 14th, I'm recording this on Monday, January 15th, where the day has not yet closed. It will be doing so in about 3 hours from the time of this recording. But for now, we're looking at the latest day, and it's showing that address activity is far down in a very blue territory. There is no network growth for Bitcoin, but we have whale transactions also very far down. You can see a couple days ago on Friday, Thursday, Wednesday, which was the day of the SEC's acceptance of those 11 ETFs, and Tuesday were all very big days for whale transactions, and then it's just started to cool down over the weekend when that started. Very neutral as far as supply held by $100,000 to $1 million BTC wallets. Still quite high in terms of social dominance, but you can see it's starting to turn a little bit of an orange color. Okay, I'm resuming my video here. I just decided to up the size of the mouse pointer because I've gotten feedback on some previous videos that it's a little on the small side. So I'll just continue from where I was, showing that active addresses here was very cold. It went to cold in terms of whale transactions here. The yellow here implies it's very neutral in terms of $100,000 to $1 million BTC wallets. Social dominance is still very hot, but it's starting to cool down. You can see it's a bit of an orange color now. Social dominance also in the orange range. So that's actually exchange inflow, that is. Exchange inflow is starting to show that there is some coins moving off of exchanges, meaning the network is getting hotter. Moving off is a good thing. Moving on is a bad thing, implying there might be some upcoming sell-offs. So right now, coins are moving off, which is a good sign. And finally, mean dollar invested age. We actually just put out a post today about how the age of dormant investments is starting to get a little bit stagnant again after it was very, very hot the past 3 months. So that's something to keep an eye on as well. But now let's turn our attention to a few of the hottest assets out there. And I want to begin with Ethereum name service. right here, you can see that it's even today, but in the last 7 days, it's up 75%. The past 30 days, it's up 170%. And in the past 90 days, it's up 240%. So it's clearly been one of the top performing assets, as represented by the fact that they're in dark green here, especially on the 7 and 30-day scales. So active addresses, very hot. Network growth, very hot. Whale transactions, very hot. Even the $100,000 to $1 million holders are still accumulating, it appears. Social dominance, nice and hot. Exchange outflow. So this is where it's concerning. There's a blue square here indicating that there is some coins moving to exchanges. Let's look at that for a moment. You can see that active addresses and network growth had a huge spike on January 10th. And since that time, you can see the price has started to fluctuate. That's not a coincidence. Usually this is a sign of a big sell-off and, crowd decision that prices have gone high enough for their liking and they're going to start taking profit there. So that's a concern. And what's also a concern is the fact that, let me make this a little more clear. Supply and exchanges has moved up to 8.3%. You see this big jump here in late December, even though prices were rising. The supply and exchanges were kind of fluctuating. It went down here, which was a great sign, but then back up. Prices still went up, and now we're at the highest level as of yesterday, at least. It was at 8.33%, and that matched the highest level we saw since February of 2023. So generally, I mean, you can see even back here, when supply and exchanges moved up, this was essentially the local top for a good 9 or 10 months here as the price declined significantly. And now we're back up at around 8.3%. A big move up here is concerning, so I'd keep an eye on that. It looks sort of toppy for ENS right now based on that particular metric and the fact that daily active addresses and network growth had that huge spike a few days ago. Similarly, threshold, another big asset. If we go back to our activity matrix, look at threshold, it's all in alphabetical order. So threshold is right here. You can see it's in orange, indicating it's one of the hotter assets among these 115 assets. And most of them are quite hot. Active addresses and network growth, very hot. Mean dollar age is pretty hot as well. So let's take a look at these. Daily active addresses and network growth. Just today, or the most recent day, we saw another big spike. 400 daily active addresses in one day for the 148th largest market cap asset. That's going to be pretty high. It's the largest day since May 4th, 2023. So clearly there might be some top signs going on, just like we saw with ENS. I'd be a little bit concerned about that. We also saw mean dollar invested age line is slightly hot again. So let's take a look at that as well. Yeah, so take a look at this. There is some dormant movement going on, just like we saw back here about a month ago, 5 weeks ago, early December. Big drop, followed by dormant activity kind of becoming stagnant again, and now we see another big drop. It isn't the largest drop in the world, but I would be a little concerned with how it's lining up with the active addresses and network growth really spiking right now. You can see way back here in late March, there was a similar drop. It went from an average age of 193 days of average investment all the way down to 156-ish days. And that aligned perfectly with this huge network growth spike. And you can see how prices just dropped significantly on that particular day. So, you know, if we play the probabilities and we look at history where similar phenomenons have happened, it's a concern that mean dollar invested age is dropping as active addresses and network growth are spiking, indicating it isn't just the dormant whales and sharks, it's also a lot of the crowd that's really starting to FOMO in just as threshold might be topping right now. So ideally, we'd want to see like a gradual drop in mean dollar invested age rather than just these sudden drops and then it just sharply goes back up again. Now, finally, I want to look at one positive. If we go back to the activity matrix, take a look at 1 inch. Yeah, it's also an orange like ENS and T were, but for better, in my opinion, better reasons. In this case, we're not seeing any significant spikes in active addresses or network growth, so it's not related to FOMO. It has been up 83% over the past 90 days, but that's actually not even that much of a standout compared to the average altcoin because so many altcoins have gone up 50% to 100% during that huge bull cycle from mid-October to early January. But especially over the last week or so, it's up plus 6% in the past week, plus 1% in the past day. So no spikes really because there aren't really any FOMO opportunities. 1 inch isn't standing out as a big breakout coin, but its exchange inflow but we can see that its exchange inflow slash outflow is indicating there's a lot of coins moving off of exchanges right now, which is a good sign. And its mean dollar age line is moving down significantly. And its age consumed is spiking right now. So let's look at all three of those. We've got supply and exchanges and mean dollar invested age already. Let me add age consumed. So we'll just look at all three at the same time. We'll make it, we'll just make it daily. 1 day. We'll make it like teal here so they all have their own colors. Okay, so starting with supply and exchanges, take a look at this. So if we just look at 2 weeks ago, December 31st, New Year's Eve, the amount of the ratio of supply and exchanges for 1 inch was at 12.14%. It's now dropped after another big drop in the last 24 to 48 hours. We're sitting at 8.01%. So we're looking at roughly 1/3 of the supply and exchange ratio dropping all the way down. And this is the lowest it's been since around late April 2023. So that's a great sign there. It means that there's no real signs of any big sell-off despite the gradual climb of 1 inch like so many other altcoins have seen. On top of that, we can see the age consumed has had a little bit of a spike, not a huge one, but a decent one. And that coincides with a small drop in mean dollar invested age. This isn't too significant if we look at history. Yeah, I mean, you can see that for most of the past year, the mean dollar invested age line was just going up. And then we have had over the past 5 weeks or so, a little bit of zigzagging indicating there is some dormant coin movement as they have lined with these age consumed spikes. Age consumed is calculated by multiplying the amount of coins being moved by how old or how long they have been sitting in their respective addresses. So the fact that these lines are, or the mean dollar invested age line specifically is going down and there's some age consumed spikes, that's a good sign of a potential turnaround, especially coming off of this drop. This could imply that there's some buys going on, not sells, because of the fact that we know that the supply and exchanges are moving down. So that could be a good sign for 1 inch. Certainly not investment advice. I don't want you to take any of this information as a sign that you should, sell ENS or sell threshold or buy 1 inch right away. All I'm telling you is these are good examples of what you can look for using the activity matrix at your disposal to really identify what the opportunities are out there. And you can always check if these colors are a little too much to go through, because I notice for me sometimes it's a lot of data. You can just have the leaderboard do the math for you and tell you, okay, what are the hottest and coldest assets out there? And then you can see Ethereum name service and threshold, number 1 and 2. Then you've got Biconomy and Maker. And you can actually look at the context behind any of these. And when you see that the threshold and Ethereum name service are having two of their best days in active addresses, is it because of a gradual climb in activity, which would be very healthy and bullish? or is it due to a sudden big spike, like we've seen for threshold and for Ethereum name service? If I put it back. Like so. So you don't want to see these too much. These are signs of tops. But if you see, more gradual rises like we saw back in late December, that would be a sign that we could see a potential breakout coming up. So all in all, this is a great tool, the activity matrix, for you to benefit from identifying which assets out there are seeing the sudden big anomalies that typically signal either a big bullish potential upcoming price performance or big bearish performance coming up. And let this be your guide to really find those anomalies. Either use your Sanbase Pro membership API that you get automatically when you sign up, or you'll even get one when you start a trial, which will be active until that trial ends for you. So either way, let us know if you'd like to check out this model, or you can just use the link in the instructions that are in the description of this video. And I look forward to hearing your thoughts, guys. Cheers, and I'll talk to you soon.